Hi traders, on this specific video I'm focusing on Eurusd and I'll be sharing my analysis on Eurusd. Not only that, I'll be advising you guys on what to focus on if you are new to smart money concepts, right? And I think I should start basically with what you should start with when it comes to smart money concepts, right? The first and most things what I want to show you guys on how I started and the step-by-step process of exactly where I got to this point, how I got to this point. So I learned about optimal trade entry, which is basically an entry pattern of the Fibonacci, right? So optimal trade entry is basically the level of 61% retracement level to 79% retracement level. So 61, 70, 79%, that's your optimal trade entry, right? So whenever you use a high and a low, you will get optimal trade entry, and this is where the market is likely to reverse from, right? And optimal trade entry was um, founded by Michael, which is the owner of Inner Circle Trader. So this is what you should be learning about, and you want to be using this. Initially what this does is that it shows you whether if we are above 50% we are in a premium market, and if we are below 50% we are in a discount market, and as long as we are above 50% that's a clean premium market. What you want to focus on and backtest on also is whenever the market is going to move lower, there should be a rating buy stops first. You understand? So whenever there's a rating buy stops, I don't look for the market to continue higher. I look for shift market structures on lower time frames, and I will be looking forward to the market moving lower instead of breakout. Traders will look at this as a breakout and wait for a retracement to this level and look for buying opportunities. I don't do that. I look for shift market structures on smaller time frame, and I pair the certain currency that I'm trading with the dollar index to see whether if we have a rating buy stops on Euro USD right now, like this specific scenario, then we should be having the opposite on the dollar index, meaning that if we have a rating buy stops here, then on the dollar index there should be a rating sell stops and a prepare movement to move higher, and then here we'll move lower, as you can see here. So when the market moves above an old high and then moves below an old low like this low, it becomes a shift market structure, right? So what's very important to take note here is that these two specific candlesticks, these down close candlesticks, these red candlesticks, they are what is called a bearish breaker. And what makes a bearish breaker? Basically, a bearish breaker only is a bearish breaker after there's a rating buy stops, which is this high, and a rating sell stops, which is this low. So the market moves high and then shifts lower aggressively. So these two candlesticks become a bearish breaker, and when you enter at a bearish breaker, you enter at this low, and then your stop loss is above this high. But obviously this is a weekly time frame, so you're gonna have to strip it down to smaller time frames. But I'm just showing you guys and giving you the rules of the bearish breaker. So when you move to the daily time frame, you'll see this is how it looks, but you wouldn't anticipate it on the daily time frame. That's why you need to start on higher time frames like the monthly and weekly first. So what I want to bring your attention to is actually the 4-hour time frame, and notice how we have a move above this high and a move below this low. So we swept this high. What is a sweep on liquidity? A sweep is when we move higher and then start reversing, moving lower inside of this range. So these two down close candlesticks, they become a bearish breaker, just like I show you on the weekly chart. So where will your entry be? Exactly at this low. It's important for a breaker block to be paired with a fair value gap for high accuracy. So you see we have this breaker and it is paired with a fair value gap that's currently forming. It might travel to this higher fair value gap, we don't know, right? But if we use time and use, for example, if the market starts retracing tomorrow inside of this level, which is this bearish breaker block, and at the same time we have news at that specific time, then that will be a classic sell. And remember what I said, your stop loss is above this high. But okay, what if this is too much for your account? Then that's not a problem. Then this very same pattern, you need to be looking for it on the 15-minute chart and strip it down, right? So this very same movement that we are seeing on this higher time frame like this, it needs to form on the 15-minute chart. Like you see right now, we are on the 15-minute chart. So I hope I make myself clear. So the next thing that I want to bring to your attention is the importance of fair value gaps, right? And a fair value gap is a three pattern candlestick formation. This green candle and this red candle and this last candlestick makes this fair value gap. You see? So when the market forms this fair value gap, what it's basically doing is it's offering fair value for sellers. The market is constantly offering fair value. If there's going to be buyers, the market has to offer fair value for buyers. Just like we had this fair value gap at this level. And let me show you guys. This fair value gap at this level, the market offered fair value for what? For buyers. So when we retraced inside of this fair value gap, the market moved higher aggressively. You see? And we have this fair value gap as well. The market didn't trade inside of it, but it has to offer fair value. And fair value gaps are not, but obviously I can go through some things. Some things are on the mentorship, but you can be profitable. What I'm just sharing with you guys right now, which is fair value, and you can focus on this and this only, right? So what I stated is optimal trade entry and fair value. Those are key, especially when you have optimal trade entry on a higher time frame. Like you see now, we have optimal trade entry. If I'm gonna use this high and this low, I get optimal trade entry. As you can see, we moved inside of the 61% retracement level, and we are retracing very quickly. We are dropping and rejecting from this optimal trade entry very quickly. What does that mean? And that means that the market is showing you that it's willing to move lower. And don't get me wrong, things can change, right? So never forget that. And how do I know that the market will likely hold this OTE, this optimal trade entry? How do I know? It has to continue forming fair value lower. It has to form another fair value gap lower, another fair value gap lower, which the market will retrace into and then move lower from. And as long as it's moving lower, it has to offer fair value, right? It has to offer fair value where the market can retrace for sellers and offer fair value for sellers to sell it, and hopefully um we move below the sell side liquidity resting at this low. So when the market is moving lower, it should offer fair value gaps higher. You understand? Just like when the market is moving higher, it should offer fair value gaps moving higher as it's moving higher. As you can see, this price action wasn't the best of price action because of we didn't offer any fair value gaps moving higher, but we could still capitalize on lower time frames. But these are low probability moves, even though we see some aggressive movements higher. These are lower probability moves. The high probability moves are happening at fair value gaps, like you see at this gap, and it happens very fast. When the market retraces inside of this fair value gap, moves slow aggressively. See, so I think that's all for this video, and if you have any questions regards to this video, you can send me a text on WhatsApp, because I don't normally respond to Telegram messages. And then if you have any questions regards to joining the mentorship, you can also DM me on WhatsApp. So that's all for this specific video, guys.